Hello and welcome to the Ontario Mortgage and Real Estate Insights podcast. I'm your host, Steve Hamoen. Today we're diving into some exciting developments in the real estate world that are sure to have far-reaching effects on the industry both here in Canada and across the globe. Let's get started with our first story. Real estate professionals in Europe and Canada are welcoming recent interest rate cuts by their central banks. These cuts, announced just a day apart, are expected to lower borrowing costs and provide a much-needed boost to the property market, which has been grappling with high interest rates for some time now. The European Central Bank made the decision to cut rates by 25 basis points, affecting three key interest rates. This move is seen as a response to the current inflation outlook and the dynamics of underlying inflation. After 9 months of holding rates steady, the European Central Bank decided it was time to moderate the degree of monetary policy restriction. Meanwhile, in Canada, the central bank made its first rate cut in more than 4 years, reducing its overnight lending rate to 4.75%. This comes after a period where the Bank of Canada's policy rate was at a 22-year high. The expectation now is that other Canadian banks will follow suit and lower their prime lending rates in the coming days. The United States is also in focus, with expectations that the Federal Reserve will cut its key interest rate twice this year, possibly starting in September. Economists have raised their inflation forecasts for the second consecutive month, suggesting that rate cuts could be on the horizon in the world's largest economy. In Europe, the reaction to the rate cuts has been positive among property professionals. They believe this will make it easier to refinance loans on properties purchased before the interest rate hikes began in early 2022. There is hope that this cut will lead to further reductions later in the year. David Ria, JLL's Director of Macro Research and Chief Economist for the Europe, Middle East, and Africa region, sees the rate cut as an opportunity for both future cuts and compression in real estate yields. This is an attractive prospect for investors, as it could lead to lower borrowing costs and potential capital value appreciation, thereby improving underwriting ability and willingness while increasing transactional liquidity. In Canada, the sentiment is similar. Real estate professionals are anticipating further interest rate reductions, which would lower borrowing costs for developers, owners, and buyers. Bank of Canada. Governor Tiff Macklem has been cautious in his statements, but he acknowledges the potential for more rate cuts, recognizing the challenges high short-term rates have presented to buyers and renters. Luke Simerda, Director of Research in Canada for commercial property brokerage Marcus & Millichap, noted that while a 25 basis point cut may not immediately spur a wave of investment activity, it signals to the market that borrowing costs are decreasing. This provides renewed confidence for many commercial real estate investors. Phil Soper, President and Chief Executive Officer of Royal LePage, one of Canada's largest residential brokerages, also expressed optimism. He noted that their research indicates half of the sidelined homebuyers in Canada plan to resume their home search once the bank rate begins to drop, which could spark market activity and put upward pressure on home prices in the latter half of the year. Now let's shift our focus to the financial markets, where Equifax Inc. has caught the attention of investors following a positive outlook from Citi. On Friday, Citi updated its financial model for Equifax, leading to an increase in the company's price target from $304 to $331, while maintaining a buy rating on the stock. This adjustment comes just ahead of Equifax's third quarter 2024 earnings release. The key driver behind Citi's revision is a slightly better than expected mortgage volume outlook. Citi's analysis has led to an enhancement of the third quarter 2024 earnings per share estimate, raising it from $1.90 to $1.94, which is about 3% above the consensus forecast by Visible Alpha. Additionally, the full-year 2024 adjusted earnings per share forecast was increased from $7.30 to $7.44. The revised price target of $331 reflects not only the modest upward revisions in Equifax's forecasts, but also a broader valuation re-rating in the business services sector. The sector's average enterprise value to earnings before interest, taxes, and amortization multiple has increased from 12 to 12.6 times. Equifax, a global data, analytics, and technology company, is set to report its third quarter earnings soon. The updated forecast by Citi suggests a strong confidence in the company's performance. This revised price target indicates a positive outlook for Equifax's shares in the stock market. In other developments, Equifax Canada has appointed Ramon Yard as Chief Data Officer, underscoring the company's commitment to enhancing its data services and promoting financial inclusion. This strategic appointment has prompted several investment firms to revise their outlook on Equifax. Oppenheimer, for instance, has raised its price target for Equifax to $315, citing expectations of benefits from high mortgage activity. Jefferies also increased its price target, reflecting a positive outlook on the mortgage sector. Equifax's second quarter results showed a 9% revenue increase, reaching $1.43 billion, and an adjusted earnings per share of $1.82, surpassing market expectations. Needham has increased its price target for Equifax to $350, while UBS initiated coverage with a buy rating, projecting the company to generate over $1 billion in revenue between 2024 and 2026. These recent developments highlight a favorable outlook for Equifax in the financial industry. As we wrap up today's episode, it's clear that the real estate and financial sectors are experiencing dynamic changes, with interest rate cuts and positive forecasts for companies like Equifax, signaling potential growth opportunities. Thank you for tuning in to the Ontario Mortgage and Real Estate Insights podcast. I'm Steve Hamilton, and I look forward to bringing you more insights in our next episode. Have a great day.